We're going to go over a tool that you guys can use in your trading. We're going to show you how to spot a setup on Tesla. And this is going to be really good for anybody who wants to just trade the trend and to overall not have to worry about looking at the charts every couple of minutes, because this is done on a bigger time frame, and every move on a bigger time frame is much more important than on the smaller time frames. Now, the indicator that we're going to be using is going to be called fair value bands. And basically, there's really one way to use it. And I change my settings to take all the other bands off. Normally, there might be a higher band up here and then a lower low band. But I just go into the style and settings and I get rid of those so that we only see these three. Now, when we're above the middle band, we're considered bullish. You cannot just buy and sell every single time that we go green to red, because you're not going to end up making money. It might look like that instantly, but it's really not. What we're really looking for a lot of the times is to be using these top bands here as overbought zones, and these very low bands here, this gray one, as oversold zones. And in most cases, when we're trading between the top two, we're obviously in an uptrend, and when we're trading below these, we're usually in a downtrend. Now, obviously, this is not going to make your trading perfect from the very beginning, but mess around with this indicator and especially use it in longer term trends. And right now, I want to show you how we can actually use this in our trading with an example here on Tesla. So you guys can see here that we had a very strong support on Tesla that was broken at about $200 to $205. This was a very strong level, and when we broke this, we had what's called a break of structure. So in most cases, when structure is broken, we will have a sell-off, sometimes recover a little bit back up to maybe halfway or 3/4 of the way up to that level, sometimes even testing that level before draining again back down to 170, or in this case, just a lower low. I have drawn up here our stop loss and where we would be setting our take profit. When we had this massive gap down, I would not have been entering here because the risk versus reward is way too shitty at this point. What we want to see is an overreaction back to the upside where we can catch this potential drop back down, because you have to see we are far below this bottom line. So the chances that we're going to snap back up doesn't mean we're going to recover fully, but the chances of a very aggressive push back up is pretty high. From here, we reject at 195 and we sell off almost back down to our target level. Once again, we're hitting this bottom level, and this is usually going to be where it's oversold and you really would want to take your profits if you had puts, and then we get another aggressive push back up. At this point, what I'm looking to see is a hopeful push on Tesla back up to about $199 to $200. And from there, we would be waiting to set a put position with a stop loss on a close over 208 and a take profit down here on a lower low of about 175. This would end up giving us a 3-to-1 risk versus reward. And the cool thing here is that it doesn't matter if the trade works out or not. We don't give a shit if we make money. We're just trying to execute our system to perfection. But if we actually break and hold over 200, and definitely if we break and hold over our stop loss of 209, then we will for sure push back up and try to test that 230 to 240 level, because this is a very strong pivot zone. We'll continue to monitor this as we move up into that $200 level. And if you guys do want to get access to a lot of my free trades and stay up to date with me in a much more faster fashion than this, go follow me over on X. And if you want to join our Discord and get access to all my trades and all of our trading bots, check out the second link in the description. Hope you guys have a good day. Peace.